Hi everybody, I'm Tom Dorsey, President of Dorsey Wright & Associates. It's the 4th of February 2011, and I'm now back for a couple of months from, or a month or so anyway, from India. I can tell you right now, your country grows on you. You know, it does. The first week you get back, it's hard to get over it because there's so much sensory overload when you're in India. Then you kind of get over it and you get back into your normal swing of things, and then the withdrawal starts to come and you find India beginning to call you back. So, who knows? I'll be back doing talks, I'm not sure what date. Tushar, the CEO of Stock Easy, will be here next week, and we'll be talking about things that we'll be doing in the upcoming India. I will be back doing seminars. I want every one of you to attend, and make sure you get everyone you know to attend, because these are going to really be well received and information you need to know. I'm going to harp on something again today. I want you to go to Google and type in exchange traded fund. Now, many of you have done this already, but do it again. Get to know this. And people think, they said, Tom, what's an exchange traded fund? Well, one of the things I said, you know, what you want to do is go to Google and then type in school of fish and then click on image, and you'll see a school of fish. And that's what an ETF is. That's what an exchange traded fund is. The beauty about the exchange traded fund is that it's just a group of stocks that are transparent, that form some sort of an index. The Dow Jones is a group of stocks that forms an index. The Nifty 50 does the same thing. PowerShares has an Indian ETF that represents the large Indian market. So if a person said in the United States, well, I can't invest in India yet, they haven't given us authorization, but I can buy this exchange traded fund that does it for me, that puts my foot in the stirrup, and I can own a bunch of Indian stocks. But one thing I want you to think about is, even though India is an up-and-coming country, and many say that they think India and China will be on the same kind of footing as far as growth is concerned, still, you're not likely to have the kind of growth in your stock market you've had over the last few years. You have to think in terms of a world portfolio. What's going on out there that allows me to invest in other countries? Well, that's where the exchange-traded fund comes in. I want you to look at a few numbers that I put down here. If you look at India itself, and I went back 2 years, excuse me, I want to have a good run for you, and I look at the Indian portfolio, which is the PowerShares India portfolio, up 93% in the last 2 years. If I go back exactly 2 years from today, let's say, how did India do? Up 93%. Well, that's fantastic. Well, how did the iShares Thailand index do? Up 166%. How did our iShares international country rotation model that would take much less risk than only one country? These are 5 different countries that are managed by us on a relative strength basis automatically. ETFs go in, ETFs come out periodically. The holding period is very long term, but it's an idea of how you can own the world in one model, up 88%. Almost the same as just India. Now, you'd have much higher risk just in India than you would in 5 different countries. If you looked at Turkey, up 149% in that period of time. If you looked at Singapore, very close to India, up 114%. Sweden, in Europe, up 135%. If you look at Brazil, up 100% during this same period. Let's look at small caps in Canada. You have the ability to buy that. Small cap, CNDA, up 215%. If you look at EPU, which is Peru, up 218%. The point I'm getting at here is, if you're a money manager or you're managing your own money for your retirement, then you need to start looking outside of India and put India in the mix, but bring other countries in along with it. This is where it's going to happen in the future. It's already happening outside the United States. In fact, if you look at my portfolio, one of the companies that you're probably becoming familiar with on StockEasy.com is DIF, www.davidindigofrank.pt. That's in Portugal. I trade there. We own a small piece of the company, as we own a good piece of Stock Easy. All 3 companies come together here. I trade on that platform, and what you'll find is that you can trade 50 different countries on that platform. Also, you can trade foreign currency. So you're going to begin to see more about DIF and places that you're going to be able to execute outside the country. But by the same token, Interactive Brokers, and there's probably many other brokerage firms inside India that give you a window into investing in the world. So I want you to look into that. Find out if your broker, wherever you're dealing right now, gives you the ability to buy exchange-traded funds outside of India India that actually trade on the U.S. exchanges. If they do that, I know that you're allowed to put a certain percentage of your money outside the country. Start to do that. Don't keep 100% in India. Begin to think global. And this is going to be important because as you go along in the investment process, the global picture is going to become much more important. What's going on in Peru? What's going on in Chile? How about Malaysia? How about Indonesia? Countries like that can be part of your portfolio and with technical analysis easily managed. So I want you to do that. Again, go to Google, type in exchange traded fund, and start to learn this well. Because when I come to India and I start doing some talks, I'm going to be talking about exchange traded funds and things that you can do with a global portfolio to try to develop and build your retirement portfolio. I'm not talking about trading back and forth the next couple of days. We can go to Las Vegas for that. I'm talking about really having something at retirement. And that's the most important thing that we can focus on right now. So that's all I have for the India Minute or India 5 Minutes. We'll see you next week.